Hey, what's up, everybody? Hey, Carlos, how you doing, man? Good to see you. So I've got some good stuff for everybody today, and most importantly, I'm going to tell you guys how to make money. So firstly, understand this. Tech and the S&P, 4 out of the last 5 days, have gone down. So you're sitting here Monday morning going, what the hell is going to go on with the market today? Just by history repeating itself, because we don't have a catalyst. What's going to push the markets higher? I'll tell you what's going to push the markets higher. When you see the ultimate drop, when the market gets shit on one day, then it'll have that significant bounce. You can say, okay, people are buying again. We saw that like 4 weeks ago, but right now we're in a downtrend. So 4 out of the last 5 days, SPY and NASDAQ down. Dow, 3 out of the last 4 days down. Okay, so let's talk about what can influence the market today. Oh, shit. How about bird flu? No one's talking about bird flu. Illinois, South Carolina, a number of states are having bird flu, which means they just have to destroy their livestock, right? They have to destroy the birds, basically. Next, COVID spiking. How does that affect anybody? Okay, well, it's been spiking for a while. Well, you have companies in China like Didi off 20% pre-market, right? Because revenues fell 12% year over year. Well, that's weird. China just came out yesterday and said that GDP was up 0.6 over estimates. That came in, stronger. However, they said their economy is going to be struggling, which is true, China. I've mentioned this before. Conspiracy theory. So I am long the yang. So I'm going to mention different positions. If you want to short the market, you'll wait for the SPY to spike, and I'll talk about different points. But we're not done yet. Next, Ukraine and Russia are going at it. And Ukraine says, you know what, we'll fight Russia for 10 years. And then I heard people talking about Russia is going to have cyber attacks on the US. But why haven't they done that yet? Because they're hoping these sanctions go away. When this ends with Ukraine, they're hoping they talk to the EU and then they talk to the US and sanctions go away. It's not happening. So the US economy will have a massive cyber attack against it. There's no doubt in my mind. Next, Russia is defaulting on a bunch of their payments. Why? Because they don't have the outside capital, because they're requiring people to pay them in ruble to support their economic structure. But again, Russia defaulting will hurt the economy of Europe. It will hurt the economy of US. Okay, next, Rivian CEO comes out, right? And this dude says, guess what? You thought the chip shortage was tough, right? All these chips because we can't make these cars. Guess what? The battery shortage for EVs is going to be even worse than the chip shortage. This is the CEO from Rivian. So he's basically casting a shadow on NIO, Li, Xpeng, Tesla a little, but we know Elon's smart, so he'll figure out a way to get his batteries finished. But he's saying more problems than the chip sector. Okay, next, and this is pretty important, okay? The average PEs of S&P stocks, now I mentioned they used to be 28. Now they're down to 19.63. So the average price over earnings of stocks in the S&P is just under 20. Now, it could technically go down to about 16 for the markets to be right, in my opinion. So I'm telling you, would not surprise me for the S&P to drop another 3% before the markets look to rebound or have some type of catalyst. Now, this morning, futures were pretty darn red. Then they actually turned green. So don't get fooled by pre-market. Wait for the market to open, whatever your strategies are. And I said this to my Discord platform. If you are a bear in this market, then you're looking for the high point in the SPY to enter puts. You're not jumping in at open. Same with UVXY calls, right? Which I like in this market because the Fed is still hawkish. I haven't spoken about the Fed. Let's remember, we have a 50 basis point raise coming in May. So that's what, like 1, 2, 3 weeks away. We're going to get 50 basis points. And then in May, probably around the 10th or 11th, they're going to talk about 50 basis point raise for June. Holy shit, 100 basis points, right? So what's that going to do? Put downward pressure on the market. What else would put downward pressure on the market? The 10-year, which is what? It closed on Friday at like 283. I'm pretty sure it's like 286 or something like that this morning. Maybe it dropped. Oh, it's 282. Okay, it was 287. So that's a positive for the market. Keep your eye on that. Keep your eye on oil, which is right around 107. If oil gets now here, the US dollar is what is it? Over 100, 100.60. Anytime it's over 100, it makes it more expensive to invest in our markets. When the 10-year goes up, it makes it more expensive to invest in our markets. So I was talking about price per earnings. So price per earnings of SPY companies, of companies in the SPY, 19.63. Of the NASDAQ 100, the average PE is 25. So understand that could go down about 5%. SPY can go down 3%. So here's what you do. Here's how you use it to your advantage. Because there are companies that are looking tasty out there. And I'm going to mention a couple companies. My tech nerd came over and fixed me up with a new computer over the weekend. Okay. I said to him, Mark, what do you like? I mean, tell me, you're just so involved with tech. He goes, AMD. I love AMD. I love NVIDIA. So we looked at the charts and AMD is getting rocked. And he's like, what? I don't get it. And I explained to him, just because you and I understand that AMD is a good company, you actually have to follow the flow and make sure you're calling the bottom. So he loves AMD long-term, AMD, but it's at 92 and change this morning. I think it could lose 3%. Not today, but I think it could go down 3% lower. So I wouldn't be buying AMD until like 89 or something to that extent. And there are a couple other stocks I wanted to mention, like AMD. So Dollar Tree, right? DLTR, where when it was at 147, you have institutions buying it. They come out, they have to close 400 stores because of like salmonella, and yet it's 30 points higher. So shit like that doesn't make sense to me. I looked at the price per earnings of Dollar Tree, and it's forward at 21.77. So to me, that's a little expensive, but they keep buying it. So I'm just showing you what they're buying. Now, me, I am buying the Yang, Y-A-N-G. Why? That is the inverse of the Chinese market. Now, if you look at the Chinese market, it was on gangbusters. It went like shot up, and the Yang dropped from $42. Look at the Yang, 42 to like 14. So I'm not saying it's going back to 42, but it's going to fill the gap, meaning the Chinese market has to give back, especially with they have over 20 cities currently on lockdown, on restriction in China. 20 cities, okay? So let's get to some interesting stocks, all right? I'll mention Roblox at $41. Well, if I say the NASDAQ can drop another 5 to 8%, then I'd be looking to enter Roblox at like $38. So although I like Roblox for a future investment, I think it can go down to 38. Hood, which they've been pushing up since it hit 11.20 the other day when I mentioned it, I would let it go under 11. I would like to buy Hood at like 1088, something to that extent, okay? But I mentioned these EV battery shortages. So that's going to have an impact on like even companies like Ford, like a Dow company, because Ford, I've heard people say, is right at that teeter point where it has support and can push north of $16.50, or where Ford's 15.5 right now. It could have the negative impact, and it could possibly retest like 13.5 or $14. So there are stocks out there, and I'll mention, let me just see what other stocks. Delta Airlines, okay? So they've been buying Delta Airlines from $39 up to $42. So it's been on fire. If you just look at the chart here, there's Delta. So what does that tell me? I mean, I like airlines as a recovery play, but there's movement that's too quick. So if I'm telling you the Dow is down 3 out of the last 4 days and Delta's pushed up too high, then I expect Delta, Carnival, Wynn, all of them to come back down a little. Now, it doesn't mean I'm bearish on those stocks. It means I'm looking for consolidation. So we'll speak about Delta specifically. If I see Delta has an outflow today, I'll give you guys a way to make money. So let me just pull up the chart here. Let's do this together. DAL, Delta. Got it. Let me see if I can share it. First time on my new computer here. Share screen. All right. I got Delta coming up. Okay, so this is a perfect way to make money. Let's see if it shared it yet. And it did. So let me shrink myself and pull this up. Okay, so here's Delta. Let's look at the 1 month chart so you guys can see exactly what I was looking at. I'll pull it up. All right, let's look at the bottom first. Huge inflows, huge inflows. These are institutional or bank purchases the last few days. But if you see, Delta was sitting in this area, 38 to possibly $39.50, and then flew all the way up to $42.50. So right now it's down a little pre-market. The point is, if Delta has an outflow day, a red day, 1, 2, 3 in a row here, Keep in mind, it's had 4 straight inflow days. So if today's market looks like it's going to get beat up, I suggest what you do is you look at the 1 month chart and you wait till 10 a.m. At 10 a.m., if you see red there, then you can assume wherever Delta is at 10 a.m., it's going to get worse on the day. So that's something I would be looking for to make money. All right. So that's a Delta play today. And again, here's another play for today, the UVXY. Now, I spoke about futures real quick. I said futures on Sunday night when futures opened, the Dow and Tech, NASDAQ were off like 140 points each. Since then, they've been regaining strength. They even went flat about 7:30 a.m. And I'm like, holy shit, pre-market's going to turn green. And then no, the Dow futures went minus 40 again, Tech minus 40. So what's most likely to happen? And this is just talking about the psychology. This is what I do with my platform. Okay, 3 out of the last 4 days in the Dow down, 4 out of the last 5 days in Tech and the S&P down, okay? Futures were off 140 points. They pushed them to green or even flat, but a little green, right? Now they're back down 40. What's most likely to happen is we're going to revisit this downturn of minus 140 points today for both Tech and the Dow at some point during the day. So with futures only being off, let's say 30 or 40 points right now, and the UVXY is probably only up, what's it up this morning? 1.50. So it's up 1.5%. So here's another play. I would like to get some UVXY calls. It's Monday, so if I go out till Friday, that gives me 5 days to be correct. Now, I know the market's been down 80% of its trading and 75% for the Dow these past couple of weeks, and the market's fallen 3 straight weeks. So I have everything saying history repeats itself. If history repeats itself, I don't really care about Monday, but if you combine the whole week, Monday, Tuesday, Wednesday, Thursday, Friday, the markets are going down. So if you say the markets are going down 4 out of 5 days or 3 out of 5 days, let's just say they go down Monday, Wednesday, Friday, and up Tuesday and Thursday. I mean, we can only say that because the markets are bipolar, so it wouldn't surprise me. But in all likelihood, the markets will go down. They have to bottom before they have a catalyst to go up. So the catalyst to push them down is the Fed still hawkish, 50 basis points, another 50 basis points, and they're reducing their balance sheet, which they were increasing through February. I've said since January before February, so they've only started reducing their balance sheet for 1 month. Imagine when we're another month in April, another month in May, June over the summer, July when trading lightens up, and the Fed is still reducing their balance sheet. That's why these markets are going to be extremely tough. That's why I suggest to you, you day trade. You're looking, if you're bearish, the top. If you're bullish for some reason, it's okay because the market will either get its worst today at like 11 a.m. or like 2 p.m. So let's mention timing real quick for those people who don't know how I time the market. I stay away from the market from 9:30 to 10:30 a.m. because it's extremely volatile. And if we're playing options and you're wrong in the volatility, then you paid too much and you'll be down 30 or 40%. So people that are going, yeah, I buy options at 9:35, and he's right. I've been down like 30% at like 10:15. Wake up. Don't do it anymore. Next, when you're buying an option, if you're generally down like 10, 12% to start, like I am, change your strategy. Buy 1 contract. When my option is down 12 or 13%, guess what I do? I buy 49 more contracts. If it drops another 10%, I'll buy another 40 contracts. Something like that. When I'm correct and it bounces back up that afternoon, everybody else is even or down a little, and I'm up like 15 or 18%. It's not killer, but it's day after day after day. I shot a video about making 3% a day. So here's the simple fact. Start with $100, make 3% a day. That's it, 3%, make $3 first day. Do it for 250 straight days, and you'll have like $4.8 million. So I'm 4 days in. I've made 15%, 20%, 89%, and I'm going to be up this morning when the market opens because I have Yang calls, and the Yang is up. So, okay, let's see what we got. Any questions here? Oh, well, so I was mentioning the Fed. I was mentioning why the market's going to go down. Okay, so in order for the market to turn around, again, it just has to have a sickening day. So understand, and I'm not saying today is going to be that day. It'll be a sickening day when something bad happens. Like Russia just started their offensive in Ukraine around 7 a.m. this morning. I mean, started with like full power on the eastern board. So, I mean, if they pull out some shit and they use like chemical testing and then somebody else gets involved and there's a fear of like World War III, yeah, the markets are going to get pretty nasty. If the Fed comes out and says they're going to raise rates quicker, yes, nasty. Here's your tracker for that. You use the 10-year, which I mentioned this morning, and let's just see if it moved any, and use the US dollar as they both increase. All right, 283. Yeah, there's no doubt the 10-year is going to spike today. Interest rates are going up today. I could see the 10-year going spiking to maybe even 2.9. If that happens, you're just following the 10-year, the markets will get ugly. If it doesn't happen today, keep it on your radar. Watch the 10-year. When you see a significant spike during the day, you'll see tech take a significant dive. And then people will buy it thinking it's bullshit, the dive. But you know the real reason because the 10-year is spiking. All right, so let me see if we have any questions here. Any questions, Carlos? Can we bring them up? All right, cybersecurity stocks. Oh, good buy. So here's the point about that. Yes, cybersecurity stocks are a good buy, but they don't have earnings. So if you look at Net, and Net's one of my favorite, I was buying it at 105, and then I sold it at 117 because that moved up too quick. Let me see where Net is, because that's a good tracker for that. Okay, it had outflow. It could definitely go back to 105. There's no reason that it had to go. It's at 113 right now. So yes, keep your eye on that. But I mentioned before, just because you figure something out up here doesn't mean it takes effect in the marketplace. You know when cyber stocks will go up? When Russia hacks some energy grid. When Russia shuts down an oil pipeline, all cybersecurity stocks will go up like 15% in one day. DDOG, Net. I mean, there are a bunch out there that are good investments. So yeah, if you're holding long-term, I would get into Net at 110 today when it goes down. Then I would buy a couple more shares at 105. You buy a couple of shares each time. It's not going to go gangbusters. It's not like Net's going to go from 113 to 150 tomorrow and you're like, I missed out. No, the markets are still beat up. I mentioned before, 4 out of 5 days, 3 out of 4 days down. Until that changes, I would be extremely cautious about long-term investing. Okay, my long-term investing, I'm holding because I'm not trying to time the market. Even though I think the market could go down 5 or 8%, I think in a year, Disney's going to be $180. So if Disney goes from 132 or 130 now down to 125 or even 123, which could happen, Disney can easily get support at 123, 124. It could finish the year at 180. So I'm still correct. I'll still return 40%. Okay, so any more questions? All right. Can you explain what hawkish means? Yes. Okay, the word hawkish is just, it's like it sounds a hawk, you know, like hawks go attack, like they pick up a squirrel and they fly away, or we saw old movies, they pick up a kid. They're aggressive. Dovish is the other hand. Dove, right? We release them at weddings or funerals or somewhere, right? Doves are peace sign. So doves mean very soft or easy-handed. Hawkish means extremely aggressive. So the Fed has to be extremely aggressive. I mentioned this before. In 2017, the Fed's balance sheet was $5 trillion with a T. In 2019, the Fed's balance sheet was $3.5 trillion, right? So they reduced it from $5 trillion to $3.5. Now it's $9 trillion. The Fed's balance sheet is like, it's like, you know, like 3 pizzas topped on each other. You know, you're not talking about a slice. You're talking about like a freaking mountain. All right, let's see if we got another question, and then we got to start trading soon. Okay, thoughts on Trib? Charts look good, might pop soon. I don't know what Trib is. So the first thing I would do when someone mentions the stock is I would look it up, TRIB. So do they have earnings? It's a biotech company. They do not. Oh, well, they have forward earnings of 61, which isn't terrible for biotech companies because biotech companies generally don't have any earnings. They're all like, okay, in the future. Look at the year chart. It was $303.80. Now it's $1.22, but it spiked since it was $1. So market cap, 25 million. Okay, I can tell you what Trib is. Trib is basically, if someone starts buying the shit out of TRIB, they're going to push it up to $3. So it would be more of a meme play for me. It wouldn't be an investment in like a long-term play in this company. It's a simple fact that they have 20 million shares outstanding. They have a market cap of $25 million, which is nothing, which is absolutely, seriously nothing. So yes, if somebody says, I'm going to push the stock and manipulate it, they're going to buy 10,000 shares at a time. It's going to look good. They'll have a couple 100,000 shares. When it goes up to $3, they'll sell their 100,000 shares or 200,000 shares, and they're going to make $400,000. That's what market manipulation is. Okay. So unless you know about this company and they have some news coming out and it's going to add to the bottom line, I would be cautious. But yeah, at $1.22, your downside is probably $1, which is 22%. And possibly you get a meme kind of short interest. It's 25 million market cap. They could push it up 200%. So risk versus reward. We have any more questions? No more questions? Awesome. So if you were interested in my 3% video, watch it. If you're on my Discord, I'll drop another video soon. See you guys later. Thanks for joining me.